Sunday, February 20th, 2022, Monaco 64, home of alternative economics and contrarian views. So we're going to look at how the shift from paper or financial assets to commodities or hard assets is accelerating in 2022. Before we start, I'd like to say I am doing my live stream tonight at 9 p.m. London time or 4 p.m. Eastern time. There's a lot going on out there in the world, geopolitically especially. Also on a political and a social basis, especially in the West, and I'm aware of that. So we'll be touching upon that during the live stream tonight. So, yeah, I've had a look at a lot of year-to-date data this weekend, and it's always good during the weekend to do that because the market's shut. Of course, there are some markets that keep going 24/7, like the crypto market, but for now, the traditional markets don't trade on the weekend. And I like to say as well, this is all my opinion, and it doesn't mean it's going to happen overnight. This shift is going to happen next week. This is more of a long-term scenario, I would say. It will take a few years, maybe even a decade, I think, for us to see the shift from paper to hard assets, and we might see accentuated shift towards hard assets because there's been an unbalance for so many decades. The focus has been on paper, stocks, bonds, technology, private equity, but not so much on hard assets. And you'll be surprised at some of the performances of the major fiat currencies this year. So I personally believe that one of the best measures of this rebalancing is the Dow to gold ratio. And why is that? Well, because the Dow represents, of course, paper assets and has since the late 1890s when it was created. And gold, of course, represents money, first of all, and also real things, the cost of real things. So the Dow gold ratio is very indicative of where we are in the cycle. And I would say, looking at this long-term chart of the Dow gold ratio, that we've been rebalancing since the year 2000 when the Dow gold ratio topped above 40. That meant you needed more than 40 ounces of gold to buy one Dow. And yes, since 2008 or 9, that ratio has rebounded. Paper assets have outperformed, but I think that was mainly because central banks and governments threw everything. At the time, it seemed a lot. Now we know they can do even more, but they threw everything in terms of debt and QE or money printing behind paper assets, because under our current fiat currency system that's been going on since 1971, we need to keep the debt game going. So they've been able to buy time. But historically, as you can see here, back in February of 1933, when there was kind of a reset, a rebalancing, that Dow to gold ratio went to just under 2, went to 1.94. And then in January of 1980, we almost went to 1. The ratio went to 1.29. So it's been going lower lows during the rebalancing or reset, if you want to call it. So I think this time around, we will definitely get to 1-to-1, I think, and we might even see it go below 1, which will mean that gold, the price of gold in ounces will maybe be even higher than the price of the Dow Jones Industrial Average. At what level, it's difficult to say. Got the shorter term move of the Dow to gold ratio. We can see that it topped prior to 2020, just above 20, around 22, the Dow gold ratio. It had been rising from around 7 or thereabouts back in the 08-09 crisis. So paper assets were outperforming, but you can see here that it started underperforming, and all of a sudden it's gone back up again when we just went past that little gray line. Well, that was back in 2020 when central banks and governments threw everything at it again because of the COVID crisis, right? But this time, it didn't really rebound that much, I would say, paper assets, because it failed to even match the old high there prior to 2020, around 22. And it looks like it's keeling over now. We got up to 20 at the end of last year, beginning of this year, when I think in January, the S&P and the Dow still made new highs, but the NASDAQ had made its high, all-time high in November. So that wasn't a very good confirmation there from the NASDAQ, and I'm not surprised we're seeing paper assets now come off. So what I'm trying to say here, they tried it again this time. I think it's shifting definitely towards hard assets. So with that, let's have a look at the big picture in terms of year-to-date performances for different asset classes. And you will clearly see how it seems to be shifting towards the hard asset arena, hard commodities or commodities and precious metals, and away from paper assets, from bonds as well. So as you can see here, the Dow Jones Industrial Average is down 6.22%. And not surprisingly, the NASDAQ is leading the way because it led the way on the way up. It's down 13.4%. S&P down 8.76%. I've looked at Europe as well. The Euro Stocks 50, that's down 5.21%. And the Bovespa, well, that's the Brazilian index, the major index, and that's up 7.69%. Not surprising, seeing that Brazil is a major producer of commodities. FTSE 100 index up 1.75%. Why is the FTSE outperforming? Well, I think there's a lot of miners in there, and the other thing, the FTSE has underperformed massively since 2000, especially the Dow, S&P, and NASDAQ. FTSE is just above 7,000 right now, and it got up to 7,000 the year 2000, so you have to take that into context, I think. The China A50, that's down 3.22%. And now towards the commodities and miners. So we've got the GDX, which is the ETF for the miners, the big mining companies. That's up 10.4%. And we've seen Newmont and Barrick do very well over the last couple of weeks or so. The junior miners are lagging behind. They usually outperform, but I think they will catch up eventually. They're up 4.22% though, nevertheless, year to date. And COMD, that's Invesco Commodity ETF. Well, that's up 11.35%. So we can see general commodities as a whole are doing very well. They've been doing well since 2020, but now it seems like the performance is shifting towards them away from paper. And there's a lot more paper wealth. I mean, the amount of paper wealth there is out there can make a shift of a few percent of the total of paper wealth into commodities, it can make commodities look massively, well, go massively higher. And I would say as well, there's another worrying aspect of commodity bull markets. Well, and there are some that are based on the economy is doing really well, so inflationary. But the other one is to do with fear, and that's to do with war, famine, and plague. And that's where the geopolitical question comes in, and we're going to talk about that later on tonight. So I've done silver as well, as you can see here, the price of silver. That's up 2.75%. Silver lagging still the general commodities, but I think it will eventually catch up. So at the end here, I've got TLT, which is an ETF based on long-term treasuries with a duration of about 20 years. Well, that's down 4.21%. HYG is high-yield corporate bonds. That's not doing very well either. That's down 4.69% year to date. Now I wanted to look at the big picture for currencies. And why do I compare them with gold? Well, because gold is the ultimate currency, I would say. It's the ultimate store of value, the money of kings. And as JP Morgan said once, gold is money, everything else is credit. So same look year to date as of Friday, 18th of February. So I looked at the dollar index because there's a lot of focus on king dollar, or the dollar is going to go up or down. But as you see, not going anywhere this year so far, only up 0.14%. So you will see there that the Brazilian real there, XAU-BRL, that's the price of gold in Brazilian real. That's in yellow. And why is that? Well, because that's the best performing currency, not gold. The Brazilian real is the best performing currency of these major economies so far this year. I guess the commodities market doing well has helped, but you'd think maybe Australia and Russia, who are major commodity countries, their currencies would be doing well. They're not. I would say Russia, the ruble there, RUB, not doing well because of geopolitical situation, because their financial situation is actually not bad. They have very little debt. The national debt is below 20%, I think. Something silly compared to ours. Not silly, something good. Australia as well. The Aussie dollar is, well, gold is up 5% versus the Aussie dollar. So the Aussie dollar is down versus gold. I think, yeah, you've got inflation in Australia running probably around 4 or 5%. I'm not exactly sure where it is, but the 10-year yield there is just over 2%. So you've got negative real yields. So Brazil, yes, their inflation rate, their CPI is just above 10%. Their latest number was 10.3, but their central bank base rate is 10.5, and their 10-year yield is around 12%. So they have a little bit of real positive yield in Brazil, unlike the countries in Western Europe where we have massive negative real yields. So I think that's why the real, surprisingly, is outperforming the Brazilian real or Brazilian currencies in the last 50, 60 years or even more have had a bad reputation. And yeah, so let's go through them. You've got the price of gold in dollars, that's up 3.84%, in pounds, 3.31, in euros, 4.2. Rubles, as I said, 8.3. The Brazilian price of gold is down over 4%. Swiss franc, I mean, the Swiss franc is actually underperformed the euro, the pound, and the dollar, and that's a little surprising because or a lot of people think of the Swiss franc as a safe haven. Even the old Turkish lira. Yes, it had a rough time last year, but this year, yes, it's not doing great, but it's not doing that much worse than the Swiss franc. It's down 6.35% versus gold, or gold is up that amount. There's the Chinese yuan. It's actually matching the performance of the pound at 3.3. New Zealand dollar doing almost as badly as the Turkish lira this year. The yen, 3.71%. Canadian dollar, kind of in the middle there, 4.67. And the Aussie dollar, pretty much matching the Canadian dollar. And then at the bottom, we've got the price of Bitcoin in US dollars. Well, that was down 14.5%. That was as of Friday. I'm not sure what Bitcoin is doing right now. And just to finish off, just show you what Tavi Costa from Crest Capital just put out on social media. He says, off to the races. We just saw the largest inflow into gold miners ETF since the beginning of the rally in 2020. And he thinks, that's his opinion, this week was a turning point for the precious metals industry. So there you go, GDX ETF asset flows. 2-week change in US dollar millions. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great rest of the weekend. Take care. Bye.